GC, what can we talk about interest rates on?
So interest rates is something that is on the minds of everybody. And so there are a few experts out there who are sharing what I'm sharing, which is, interest rates are high right now. Home prices are flat and holding steady. But, just think about what this market would be doing right now if interest rates were lower. So, our favorite shark out there, Shark Tank, Barbara Corcoran has come out and said, housing prices are going to go through the roof, and here's when. And she says the minute those interest rates come down, all hell is going to break loose and the prices are going to go through the roof. Right now, sellers are staying put, but they're not going to stay put if interest rates go down by 2 points. So I read this on Friday night and I was like, I wonder what has actually happened to home prices when interest rates have actually gone down 1% or 2%. So I started to put the data to it. So here is what actually happens when interest rates drop and the home price appreciation that has followed in previous years. And I'll tell you, I go back, I pulled this data from the Federal Reserve Bank of St. Louis. I think they had data all the way back from maybe the early 50s. It was a lot of data. There have not been a lot of times when the Fed has had interest rates up this high and then dropped interest rates at least a percentage point within a following year, which is exactly what we expect to happen when the Fed does drop interest rates here. It happened in 1982 and 1983. From 1982 to 1983, the average interest rate for a 30-year fixed rate mortgage dropped 2.8%. And then the year following that, you had 6% home price appreciation here in Jacksonville, Florida. 1984 to 85, interest rates dropped for the average 30-year fixed rate mortgage dropped 1.5%. The following year, you had 4.7% home price appreciation, which is more than the norm at that time here in Jacksonville. 85 to 86, interest rates dropped another 2.2%. You had 4.4% home price appreciation the following year. 92 to 93, it dropped 1%. You had 2.5% home price appreciation the following year. 2001 to 2001, interest rates dropped 1.1%. And next year, you had 8.9% home price appreciation. And then there's 1 year where it didn't apply. What happened there, Pablo?
The Great Recession that was caused by housing.
That was a great recession, guys. It was a little bit different. So what we're seeing here is that there is a significant correlation between when the Fed drops the Fed funds rate, which lowers average mortgage rates for everybody who buys a house, and home prices going up. So you can listen to Barbara from Shark Tank. You can listen to me, who has lived this for the better part of 18 years. But that is our thesis. And, and that's why, even though you have that discussion of home prices potentially in your head, you're like, maybe I should wait for them to come down. It's not going to happen as low as inventory is right now. The interest rates discussion, the best thing about interest rates is that homes cash flow today, even at an interest rate that is higher than you probably want. But then when the interest rates come down, all you do is refinance. And the numbers just get better and better and better.
That's what Dean Curry said here in the chat. The early bird, marry the house, date the rate.
There you go.
So you get in, you buy the asset, and when interest rates go down, you refinance and you get that infinite return kind of thing going, right?
There you go.
So one of the summary stats we put in here is the idea that it was 5 of 6 of the times that the interest rate dropped, it went up, right? In Jacksonville, 2 out of 3, it appreciated more than 4%. And 1 out of 3 actually appreciated more than 6%, right? So these are like really high numbers. The average home price appreciation in the following year after an interest rate drop was 5.3%. So GC, if I'm looking at these stats that you put together and I'm trying to figure out what's going on in your genius concepts head, I'm hearing there's upward pressure on pricing due to MOI and supply. And I'm also hearing that there is going to be a moment here in the short run that interest rates are likely to drop, which is also going to create upwards pressure in pricing. So am I out of line thinking that your recommendation is generally a good time to buy?
It is a great time to buy, especially considering your alternatives in the overall investment space. But this is a great time to buy, and it's because you have a high floor and you have upside. You have a high floor because of the low supply of housing that is going to keep prices stable, which is exactly what's happened over the course of the last year and a half. And you have significant upside because we do expect home prices to go up at some point in the relatively near future. It will happen when interest rates come down. And the reason why we see that as upside is because you can't fix the supply problem fast enough. You cannot build fast enough to a place where you don't have a supply problem, call it in the next, 3 to 10 years. And, we would expect that interest rates would come down somewhere before that time frame.
Makes sense. So that being said, risk mitigation and upside, right? What we love about this asset class, I'm hearing, if I'm thinking about it, don't, like from a historical lens that we just looked at, right? Like from looking at historical decision-making, then move forward with it. And seems like things are going to go well because you got that high floor, you got that upside baked in. That is from a historical perspective. Let's take a snapshot of what the actual numbers, what the housing numbers look like today, right? So this is present day, Jacksonville versus US real estate market stats.
Yes.
So this is going, you were basically just talking about like in a vacuum, prices are likely to go up in the short run because of these pressures, but this is how Jacksonville looks in relation to the rest of the US.
Yeah, absolutely. So we're going, not telescopic here. We'll go microscopic for this moment in time. You like that?
Whatever scopic you'd like, sir.
We'll go out of the theory here. In the US, in September of 2023, our median home sales price across the country here is $412,000. So in Jacksonville, our median home sales price is $350,000. Across the US, you've got 33 median days on market. That means the days from the time that you list your home for sale to the time that it's under contract. And in Jacksonville, it's 34 days. Here's interesting, though. I put Jacksonville's performance 1 year ago to today, and I also put Jacksonville from 2019, compare that to 2023. So year over year, home prices have gone up a little bit less than 1% in Jacksonville. Home prices last September were $347,000. They're $350,000 for a median home sales price here. Our days on market a year ago were less than what they are right now. But and I think that would make sense. The market was completely on fire from all parts of 2021 and many parts of 2022. But let's go back to 2019. Home prices, of course, were lower. $235,000 was the median home sales price in 2019 before the pandemic. And by the way, everybody thought investing in 2019 was a good idea, right? There weren't headwinds like there are today. So, but look at that median days on market. You had 43 median days on market. I hear all the time this narrative that this is not a good time to buy a house or that the market is, slow or whatnot. In 2019, when everybody thought this was a good real estate market to buy, we had 21% more days on market than we have right now. And you all called that a good market back in the day. For some reason, now we have 34 days on market and people are saying that real estate, it's a bad time or that it's slow or that it's potentially crashing depending on who you're looking at. So I think this perspective really does show that real estate continues to move, number one, because it's a critical need, and especially in a growth market where population continues to grow like Jacksonville, Florida.
Got it. Okay, so market when it comes to Jacksonville looking attractive in comparison to the rest of the US, right? Like right on par, medium days on market, still something that we talk about here, which is attractive. It is below the median home sales price of the United States, which means more upside as well. It means a attractive market to get into without having to bet the farm on it, as we like to call it.
Well, and it means positive cash flow.
And it means positive cash.
It means the ability to have an asset that pays for itself every single month, which is, you can't get that if you go to places like California, New York, Virginia. Many of our clients live there and they choose to invest here in Jacksonville for the reason that you see here, that it's lower purchase prices.
Got it. So that's the Jacksonville market versus the US market.